Okay, this is Brian Stoll for Timing Strategies, Friday, December the 7th. Hey, Pearl Harbor Day, for all those that remember. Um, anyway, let's get down to brass tacks. We were speaking in our last commentary yesterday about initiating a short position. We're looking for it today. We did not put that position on today for, Fed reasons, weekend reasons, things of that nature, although it was very, very difficult not to initiate at least a scale in today, although we didn't, right there of about 35%. Ultimately, I'm looking to be anywhere between 65 to 100% short. But again, the Fed meeting on Tuesday might, again, is keeping things from doing what we'd like to see under normal courses. Otherwise, today we would have been short. So we're up in the range. We're up at that regression channel, the red line. Nothing really much to say about that, so we're going to go to another one real quick that we did initiate a short on today, was the XLF. And we got short. I know we were talking about it yesterday, maybe getting short up here right around the 32.5 level. We did not get that price today, so we did get short today using the XLF counter symbol SKF, which is a 2 beta fund right there as of that low. And again, our stop using the XLF, if we have a stop on this one, actually we do, will probably be a stop somewhere, somewhere up in that range above the highs. If we get a move on a closing basis above today's highs, then yes, we'll just go flat for the minute and then wait for it to head back up again. So another symbol that we're looking that we may get short starting Monday, Tuesday is the IYR. If we get a close below that, today's low is basically unchanged. Anywhere below the close of today or the low of yesterday, what we will be doing is putting on a short position using the negative ETF, the SRS. It's a 2 beta, so we go half and it conserves capital. Works real well. Other position that we have on still, and this is really starting to work out much better than I thought. I wasn't looking for this kind of move this quick in the game. But we did get short on the 29th, the Ridex Inverse Bond Fund, the Juno Fund. That's for what it used to be called. And man, did that really take off today. People are dumping bonds. It's just something's going on here. And like I said in one of my comments yesterday, the Fed, they just think that they've got a bottomless bucket of money, and they can just keep manipulating stock and bond markets the way they want and have it, any way they like. They don't have a Volcker in there, and so the rest of the world is doing to us and doing to the Fed what they refuse to do for their own sake, kind of like a child that needs to be disciplined. It's being disciplined by, instead of a big bully, the rest of the kids in the schoolyard are ganging up on that child, on that bully, and saying, "Hey, we've had enough of you." So bonds are getting sold off in anticipation of a Fed meeting. Certainly we're going to get a pullback from there, but hey, that could be a very strong counter trend move. And if we look back at the 30-year, if we stay above this level that we've got right here on the 30-year, which we closed above today, and I thought we'd get a little more of a struggle, a pause and effect there. We're above that 5.5 level. If we can stay above there, bonds could be, who knows? Certainly this top of this range is the likelihood or possibility. But in the meantime, we'll just stick with our shorter term targets, somewhere up around 4 3/4. 4 3/4 pretty much is probably, if we keep going straight up from there, is going to be a place where we're going to get a pause, and that's right about there. And that would give the move about a 10% move back. So 4 3/4. Right around there would give a 10% move from the lows, and at that point we'll see what happens. But that's it looks like it's going to get there quicker than we thought. I also want to bring on the idea that the emerging markets, the EEM. Let me get rid of this stuff. Everybody loves the emerging markets in Brazil and FXI and all the other ETFs. My friend, don't be grabbing that hot potato from the next guy, because today we initiated a short position using the inverse ETF, and this is Johnny on the spot, right on time, is the EEV. And it's an inverse 2 beta ETF. We are long that as of today's opening. And that is, I got a really strong impression that the emerging markets, they may not be toast, but if you want to sell them, this is not a bad place, and it's a very low risk point to get short the emerging markets or some of the other ones like the EWZ, the Brill, or the EFA, or so forth. And we already have a small position on that, so we have a short position in the financials using the XKF, and we have which is that one, which is long that fund, and we also have a short position in the EEM using the EEV, which is again a 2 beta fund. And so far so good. The last point I want to bring up is the gold, GLD. This is again comment from my previous video on yesterday's markets on gold. I am looking to get long gold. I would like a break lower from here to feel more comfortable about putting on any size. If you look at the XLE, if anybody is long oil stocks and long, OIH or anything else, this is not a bad place to maybe take profit if you want to get short. I'm looking at that as well as a potential setup for a short side on the XLE. And the OIH is kind of also ran, in my opinion. OIH is really starting to lag. They had a distribution, I believe. That's why we're looking like it is now. But the XLE being the strongest of the oil sectors as far as the services, again, don't stick around to the party too long, because when the cops show up, they grab everybody. Other than that, we'll see what happens Monday, Tuesday, and again back to the spiders. We're looking for a short position. If we get the same kind of day that we get today on Monday, we'll probably throw on a 35% short position. If we get a move that takes us without a violation of the low of today, which would be Friday tomorrow, back up into that level of about 151 half to 152, 152 half, we're going to go 60% short right there, right up into that red line, that regression point. And that comes right at about 1520 on the S&P, 1520, 1525. Other than that, please send us any of your comments, questions in an email, or you can give us a call at 800-675-2131. Have a great weekend. Merry Christmas, Happy Hanukkah, and talk to you Monday.